Peloton up 5%.
What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today. Interesting, different, unique, innovative companies. Nia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley, that is the CEO of Akerna, the best trade idea resource out there. All right. We got the dancing music going, guys. My name is Kathy Wood. I'm here to talk about stocks. No, just kidding. That's not my name. But what's up, everybody? Welcome to the Power Hour. We have a special edition for you guys today. Normally, you know, we are running this show from noon to 2 o'clock Eastern. Today, we're going till 3. All right, we have an extra hour. Kathy Wood, ARK Invest's Kathy Wood. I would argue the biggest name in the stock market right now, more influential to markets than Warren Buffett. She's going to be joining us at 2 o'clock Eastern, 2 p.m. Eastern. Hit the like, share the stream. We're bringing Kathy Wood. And guys, what I think is special about this interview that we're doing is that it's not as much that we're going to be interviewing her, but rather the community. We only got Kathy for the interview because you guys asked us so many times, right? We reached out once, twice, didn't get her booked, didn't have a confirm. We sort of got the soft yes, etc. But you guys kept following up with us like every day. The question was, when is Kathy coming? When are we doing this? So we finally got a hold of her. I see people in the chat are saying, is Kathy Wood really coming? Did he say 2 o'clock p.m. Eastern? Yes, that's what I said. 2 o'clock Eastern, right? That is when she's hopping on. That said, I just dropped a link. If you want to register, you want to get an email. It's 2 o'clock Eastern, guys. That's the answer. Wow, can't wait. Okay, well, I'll have to be here. But all right, we're gonna do some fun things while we're waiting for Kathy, guys. All right, it's not gonna just be like we're sitting here and speculating about what she's gonna talk about. I mean, we've got a jam-packed day. All right. So here's what I've got on the books for us today. All right, I've got a list of stocks that we're going to go through. I've got a new stock that I'm going to be buying. I'm also going to be doing a lesson on selling puts. It's going to be sort of a combo lesson, right, where we're going to be doing some valuation work. So we're going to be evaluating a stock, you figuring out some price targets, right? I'm going to be pulling down historical financials, forward-looking financials, backing into a price target on a stock, and then I'm going to be making a live trade on that stock. I'm going to be selling options against it. So we're going to do that. Other tickers that I have for us to talk about today, absolutely 110% ticker RKT Rocket. We are going to talk Rocket. We're going to talk NEO. We're going to talk ChemFarm, KMPH. That one is moving today. Shout out to you guys if you've been in that one for a while. And then of course maybe we'll do some Abercrombie and Fitch. Joining us at 12:30 today, we're gonna have Jack Hurley. Jack Hurley, big deep value guy. I think it's super appropriate to bring him on today. He's gonna be giving us some names that he likes, and I think it's appropriate to bring him on today because he thinks about markets in the same way that Kathy does. In that he's super emerging technology. He looks at small stocks and is trying to find some sort of advantage, right? Some story that's misunderstood, some stock that's not recognized, nobody knows what the ticker is, etc. So he's going to be doing some deep value there. At 1 p.m., we're going to be bringing on a public company CEO for an interview. And then 1:30, Tom Nash, Mr. Tom Nash, king of valuation, king of fundamental analysis. Shout out Tom. He might be out there in the chat. He hops in and says hi sometimes. But Tom Nash is going to be joining us as well. And then, of course, 2 p.m. Eastern, Kathy is going to be joining the stream. That's what's going on, guys. Yeah, I mean, I don't know. If y'all feel like you were bait and switched, it wasn't me. But you're not at all. Because again, we were grinding to get this interview scheduled, guys. And again, 2 o'clock Eastern. That's what all the registrations have said. 2 o'clock Eastern. That's when we're bringing Kathy on. And I can promise you one thing. If you're new to this show, I'll tell you what these 2 hours we spend together every day is all about. Is ideas, right? This is the idea block. We bring ideas not just from myself. Not just from the guests that we bring on, right? We've got 3-4 guests that we're bringing on today. but also out of Zingernation, out of the community. So if we are not delivering trade ideas to you guys, then call us. That's what you should be calling us out in the chat for, because that's the whole point of this, right? Is we're bringing the ideas. So, all right, let's hop into it. And before I drop the first tickers, or I guess you guys do this. I've got a special co-host. Drew Levine from the Benzinga team is going to be hanging out here with us. So I'm going to add Drew to the stream, and then while Drew's sort of saying hi, telling us which stocks he's looking at today, guys, drop in what tickers you want us to take a look at today. I'm going to be buzzing through some stocks out of the chat. Let's kick it off like that. Then we'll get into my live trade and the valuation analysis that I want to do. But all right, I'm adding Drew in here. Drop in the tickers for us to look at. I'm going to be jotting them down, and we'll pick a handful of them to go through. Let's do it. Drew, what's up, man? You're on.
How we doing? It's been a minute.
Man.
I miss you. I hope you're doing well.
I know. I mean, I haven't talked to you in, I don't know, weeks, months.
It feels like that.
I'm like, hey, I need a co-host today. Jason's getting ready for his Kathy Wood interview at 2 o'clock Eastern. So I'm like, all right, Drew, you're the man. Let's hit this.
Let's do it. I'm here. Let's get it.
All right. Well, give us. You started. I'm looking at tickers out of the chat. We just had Zingernation just dropped us a ton of tickers there. They dropped us a handful of likes on the stream so we can blow this thing up. But tell us what you're looking at while I go through and look at some of these names.
Yeah, I'm guessing this one's in the chat. I think I saw it earlier today. I joined the chat a little early. Palantir, right? Palantir has been a stock. We've seen it go to 45 recently. Kind of shook me, put me through a loop there. I was like, what? This is a $45 stock? Okay. I mean, maybe one day. But I love it. I'm very long Palantir. I think every time I come on, I talk Palantir. Right now, it's starting to dip, right? So it was at 45. Now it's almost at 25, 24-ish, right, area. And I like it here. I'm accumulating shares, buy and hold, collect those stocks.
All right. So you like it. And I'll give my quick take on Palantir, which is I sell puts against this stock almost always. Since this thing's had an IPO, I've been selling puts against this name the entire time, and I've never been assigned shares. And let me walk through that transaction a little bit. So when I sell puts against the stock, I am getting paid on the day that I make the transaction, right? I get cash credit to my account. Great, we're happy. We got paid $500,000, $2,000, whatever the volume is that we're doing. And basically the risk that we're taking on is we're agreeing to buy shares at some point in the future. I always go 1 month in the future. So I'm getting cash today to agree that 1 month into the future, I'm going to be buying the stock at a predetermined price, whatever that strike price is. Okay, if you guys want to go deeper into selling puts, I've got a whole worksheet we're going to go through today. We're going to crack out the Excel. We're going to do some valuation. I'm not going to give the stock yet, but it's a hot one. But we're going to do that today, and then we're going to go through the whole process. What's the advantage of selling puts, etc. So all right, Palantir is the first one. Let's grab some other tickers out of the chat. And I see Sean in the chat in Zingernation out there. He said, is Raz going to dress up nice today for this? I'll sneak peek it. I'm not going to leak a ton. I know what the questions are. I'm not going to leak them. All right, there's some tickers in there, and I don't want to get those out there. But I will leak. Is he going to dress up nice? He is. He looks pretty dapper today. All right.
Love to see it.
All right, Drew. I got 3 tickers out of the chat. Let's just hit them right away. And then I've actually got our young investors who's going to come on before I do my new pick and walk through my valuation. But all right, SOS. We cannot not talk about SOS. If you're out there, if you're an SOS person, I'm doing this one for you guys. It's spammed into the chat. So let's look at this thing. So the stock got some positive commentary today, and this chart's a little small. Let me try to make it a little bit bigger. This is a 5-day chart that we're looking at now, so I believe it's 5-minute candles. Let me grab a quick confirm here. So we are looking at 10-minute candles here. Stock is up nicely today on positive commentary out of an analyst, some good research there. I have an opinion on this one, Drew. Do you?
Not really, to be honest. Not a stock I follow very much. What's your opinion, Luke?
All right, so here's mine. If you guys don't know SOS, and again, I'll do the ticker phonetically. It's Sandy Oscar Sandy. It's a crypto. It's a crypto play is what it is. I I trade one of these crypto stocks very, very heavily. The stock is Voyager Digital, guys. I drop a ton of research on Voyager Digital, specifically on my Twitter. I'll put a link in the chat there so you guys can check it out. But the reason why I like Voyager Digital as my crypto play of choice is that rather than it being dependent on the price of the cryptocurrency, it's a brokerage, so it makes money both ways. All that Voyager needs to make money is trading volume, right? If there's volatility, whether it's up or down, Voyager Digital is making money, right? It's not a miner where you need the price of Bitcoin to be above X level for them to make X amount of margin, right? Voyager, basically, the way that it works is they quote you a price that they're going to fill your order at. They're connected to 12 exchanges. Rather than being an exchange that's only connected to one, they're connected to 12 individual exchanges. If they're able to fill your trade at a better price than what you were quoted, they take part of that money. So the ticker there, sorry guys, VYGVF. That's the OTC ticker. We estimated on this show. We actually did the math work. Again, you can find it on my Twitter, but we did the math work on this show to basically back into, we expect that the company is going to make $40 million of revenue in Q1. Check this out. In the first 2 months of the quarter, the company made $28.5 million. So it's right freaking in line with our $40 million estimate. And the analyst estimate was only $23 million. Right? So we came out boldly on this show with Zingernation. We backed into, hey, they're going to make $40 million. Double the analyst estimate, and we're going to be pretty much right on. We've been riding the stock for a while. They just gave us a company update on Monday, and later this weekend, I'm going to be putting out some more research on that name in particular. So that's sort of my take of all the crypto stocks. That's the one that I like. All right. Next stock, Drew. Let's see if you have an opinion on this one. Ticker SE, Sandy Echo again. We're pulling some out of the chat.
C Corporation, of course, or C Limited, I believe. Yeah,
Yep.
C Limited. Yeah, so this was actually a stock I was looking at way before COVID. I'm like, what doesn't this company do? If you guys aren't familiar, this stock is basically like Amazon, but in Asia. They service a lot of countries throughout Asia, and they're absolutely killing it. They got a lot of different sectors. They're not just doing, the Amazon like marketplace type of business. They do a lot of different stuff too. And I was just blown away, right? And this thing was already moving up. If you know me, and I'm sure you know Luke, we try not to chase, right? We try and we sell puts and get in maybe, and we try and catch a little bit of premium, but this thing just kept on going up. And I said, you know what? It's going up too much. I'll wait for it to dip. And it never really did. If you go to that year chart, I mean, this thing is just going up to the right. It really is. So my personal opinion is I think this stock is absolutely killer. What's its market cap right now? 103 billion. I think it's still not massive, right? It's not $1 trillion market cap. It has a lot of room to grow. And I like it. I really do. What's your thought, Luke?
Yeah, so I'm not super familiar with the company, but the chart is beautiful, right, guys? This is now a daily candles that we have up here. This is a 1 year time horizon. Sorry, I just did a little scroll in there for you. 1 year time horizon. I mean, you don't get a chart that looks any better than this, right? If I were a purely technical trader, which I'm not, I'd be getting into this thing now. I definitely wouldn't be betting against a chart that looks like that. In terms of where I'd be putting my stops, I'd be looking at this cluster of lows here. If we fall below this 232, 231 level, that's when I'd be bombing out of it if I were to put a long position on. So it's about, 8% or so below where the stock is currently trading at. Yeah, I like this one as well. And guys, I just shot a message to Ryan Rosbiani on SOS. He is the expert on that stock. I just shot him a message to see if he can come on for 5 minutes and talk about that one. So he knows it inside and out, unlike us. All right, but Drew, we're going to do one more out of the chat, one more ticker out of the chat. Let's hit KMPH. KMPH, guys, I'm going to start us off with the news that came out yesterday. So we talked about this on the show yesterday. Basically, the company had a drug for, I believe it's ADHD. Yep, ADHD. And they had what's called the PDUFA date. If you're an investor and you're a stock trader and you don't know what PDUFA date is, let's take a minute and explain that, because you do need to know it's a binary event. And when I say binary event, it means that a stock price is either going to explode upward or it's going to fall topple downward, depending on the outcome of that event. Okay, so PDUFA date basically is an FDA decision, right? You've got these companies, they're working on these drugs, these new treatments, and they go to the FDA, the Food and Drug Administration, and say, hey, FDA, will you approve my drug? If the FDA says yes, the price skyrockets. If the FDA says no, the price tumbles, right? That's how it works. I personally stay away from these stocks because I don't think that I have any sort of competitive advantage to read into the minds of the FDA, right? We do have Vivi, who runs our biotech show. She is an expert on this space. She works in the space. She has a career in this space, and so she does have an advantage and does pick some of these names. I believe she's coming on with us at 2:30 tomorrow. But yeah, this is absolutely a Vivi BioQueen stock. Let's zoom in a little bit. Here's the 5-day chart on this one. My opinion in terms of taking a position now is I wouldn't, right? We saw this pop way higher. And I've seen some optimism that, okay, hey, the price is going to get back up to there. It might, but keep in mind that the price got up that high early this morning because of short covering. This stock had a very high short interest, and so when they got that FDA approval, all those shorts, the stock pops 50% to start, have to start covering their short positions, and that's what really pushed it higher. We get some of that settling out. Stock is up 50% at this point. So I don't love it in terms of an entry. Again, I haven't not done the deep dive analysis to project out future sales of this drug or anything along those lines. But just on the basis of we already had the short squeeze, it's come down from there. And then the other thing is that it is in a downtrend, right? I never try to pick bottoms, right? You get smelly fingers if you do that. And you can lose some money, right? I blew up three accounts between ages 15 and 19, right? 15 years old to 19 years old. I blew up 3 accounts. One of the accounts I blew up was because I was trying to pick bottoms like, hey, the price is declining. Now is the bottom, right? Rather than waiting for any sort of confirmation. So if I were to get long this stock, I would personally wait to see some sort of an uptrend and then use that as my opportunity. Drew, do you have any opinion on this one?
Yeah, so anytime I think of biotech, I think of my first biotech trade I ever made. It wasn't too long ago, actually. I'm not a big biotech guy myself. Corbus Pharmaceutical. Analysts say it was going to 50. People were buying puts, so I sold a bunch of puts, and the thing absolutely tanked on me. And, I lost the minimum. I didn't own shares. I could have lost a lot more. But, I don't know. With these binary events, like you said, the stock's already going up or it's going down. And it seems like, unfortunately, most of the time it goes down, right? It's really hard to pass these tests. Unless you have an inside advantage like you just talked about, then it seems almost like you're kind of just throwing your money on the craps table, let's say. So personally, it's not where I put my money. But if you really do have some type of a hunch for one of these stocks, take a stab at it. But personally, I'm not touching it. I don't really see the need to, and I just am not informed as an individual.
Yep. All right, so there it is. We started off, we did 3 tickers out of the chat. There's one more that I see so many people asking that I'll promise we'll get to, which is Peloton, ticker PTON, Papa, Tango, Oscar, November. Of course, we are going to talk about Rocket today, ticker RKT. We're going to talk about NEO today as well. And then again, I'm going to do some quick valuation analysis along with a put selling lesson with the new pick that I have, a position that I have not gotten into previously. I'm going to buy it live on the show and explain, sort of walk through the math on why I'm buying the stock. But without further ado, guys, I've got another special guest for us today. I figured, hey, since this is Kathy Day, let's bring on another special guest here. I've got our young investor, Mr. Zach. What's up, man? Welcome back to the Power Hour. And guys, if you and I guess here's why I wanted to bring our young investor on today, right? We're all here to watch Kathy, right? We want to see what Kathy has to say. But this is like a little bit motivating and I think inspirational, right? Our young investor, he's 12 years old, and he knows more about the market and digs deeper into some of these stocks than I would argue Drew does. Maybe me too. But all right, man. What's up? Welcome back to the Power Hour. How are you doing?
Thanks for having me back on, Luke. I'm well.
Absolutely. So all right. I guess give us like the quick one-liner on what you I guess sort of your market background. And then let's dig into some of the names you like. And somebody in the chat's calling me out. They're saying show your P&L. That means you're new to the show. I show my P&L every single day. Check it out. Today we're down $1,100. Not a notable day any one way or another, but we show the P&L in every single open position in the live account, literally every single day. But all right, young investor, floor is yours. Tell us about some of your investing background, and then let's get into some of the stocks you like.
Yeah, so my name's Zachary. Otherwise known as a young investor, at Investor2 on Twitter. I invest mainly in growth stocks. I've got around 5 growth stocks in my portfolio right now, which I'm most excited about. At the moment, I'm about 103%, despite the correction in the last 9 months. And I recently brought a brand new stock, which I look forward to sharing with you guys in a minute. But yeah, you can follow me on YouTube at Young Investor, or follow me on Twitter at Investor2. And I think this might be my 3rd or 4th appearance on the show.
All right, so you said you've got a handful of growth stocks that you like. Which is your favorite, and why do you like it?
Yeah, so right now, my favorite for this year specifically is CleanSpark. I recently got into this stock. I missed
All right,
it.
So CleanSpark. Sorry, I'm the guy who slows everybody down. CLSK is the ticker, because I know we're gonna get asked, guys. So CLSK, Charlie Lima, Sandy Kilo. That's the ticker. But all right, keep going.
Yeah, so a lot of you have probably heard of this stock. It's not kind of a brand new stock on the whole sector. But I think even by the price action today, it will show it's really undervalued. So CleanSpark are a microgrid company. They sell microgrids. If you don't know what microgrid is, basically if the main power grid goes down, if you've got a microgrid which has been slowly taking power from the main grid, it'll enable your house and everything to stay powered up for a limited amount of time. CleanSpark recently acquired a Bitcoin mining company, and this is the bit which I'm most excited about with this trade. So CleanSpark right now have got around 50 million in cash or in assets, around 5 million in debt if I recall. So right now they're going to be trying to get this Bitcoin mining division, which they just brought up, to around 7 to 8 Bitcoins a day. And that is around the same amount as Marathon Patent Group. Marathon Patent Group trade around 5x higher than CleanSpark right now. I mean, Marathon Patent Group right now are up about 6 or 7% on the day as I last checked. We're actually down on the day, even though in the next few quarters we'll be producing the same amount. And as long as Bitcoin stays at 50k, as long as Bitcoin is above 60,000, 6 grand, CleanSpark are profitable on their Bitcoins. So it's going to be a very profitable business for them. I did calculate the other day that if they mine 7 Bitcoins a day, for the whole year, that's going to be around $115 million in revenue at $6,000 cost. And with Soda Management said that $6,000, anything over $6,000, they make profit. So at $6,000 costs, they're making about $112 million in profit per year in the next year or two. So I just think this stock at $700 or whatever million, and seeing all the premiums all the other Bitcoin miners are trading into, because sometimes I think people don't really want to touch and just normal Bitcoin itself, maybe because of fear or something. But with what the stock is at compared to competitors like Marathon Patent, I do think this stock offers really extraordinary value right now at these prices. I brought more today, I brought last Friday, and I brought more on Monday.
Okay, so basically, again, the stock that you're most excited about, and guys, if you're just tuning in, this is our young investor. He's 12 years old. He is inspirational for all of us, the way that he loves the market and digs into these stocks. I think we all wish that we got started this early. Maybe some of you did. But the first stock that he likes is CleanSpark, ticker CLSK. That's Charlie Lima Sandy Kilo. And basically, the reason that you like it is because they're ramping Bitcoin mining up to, I believe you said, 7 to 8 Bitcoins a day, which should drop about 115 million of net income down to the bottom line. Market cap is 600 million, so they're really only trading at what, 5 times PE or something along those lines.
Yeah, as long as they get to 112 million this year or around later this year, that's good. I mean, with all these small caps, I always make sure to message a company, just because you're basically guaranteed a response. You might not be guaranteed a response with Amazon investors. But, with all the small caps, I always like messaging the CEO. I've been messaging the chairman right now, and yeah, I've been talking about the Bitcoin mining right now, and honestly, I'm really confident with the management team itself. Last year, this stock's probably at $2 or $3. They were almost about to go bankrupt, and this shows how much I like the management team. The management team went without pay for the whole year, or half the year, and they brought stock at the same time. So they went without pay, brought stock to make CleanSpark succeed. They buy stock right now, and I mean, most of their pay and salaries in stock. I like how the management team is heavily invested into the company. because you never know what scams or not in this market. I mean, I think eHangers had a short report dropped. They went from like 114 to 46. I don't know if that was they're a scam or not, or if it's just classic short report. But the point is, I like how the management team's so heavily invested in this company. They want it to succeed, and I don't think they're going to hold anything back in their enthusiasm and hard work to make this company maybe be a $1-2 billion market cap in the next few years.
Okay, wait, and you did talk to the management team, it sounds like you actually reached out to the CEO and that sort of thing?
Mm-hmm. Yeah, so I reached out to the chairman, and he's pretty accessible, and Matthew Schultz, former CEO, and now he's the chairman on the board, and he's pretty accessible. If you just want to DM on Twitter, you're guaranteed to get a reply.
Okay, that's amazing. All right. So not only is our young investor involved in the market and digging deep at 12 years old, he's also talking to the CEOs of these public companies. I love it. I love it. I love it. That gets a first air horn of the day. All right, there we go. So CleanSpark, I also think that the microgrid solution is interesting. I know you're most excited about the Bitcoin angle, but the microgrids I think are compelling too. But all right, give us one more ticker.
One more ticker. One I have been loading up on. Really, the dip is just Tesla, classic Tesla. I think I've been doing a lot of research.
Boring. All right, fine, do Tesla.
All right, you want another one? You want one more interesting, Luke?
I think so. All right, no. Let's throw it out to the chat. If you guys want to hear his pitch for Tesla, drop in 1. If you want to hear another small cap stock that he likes, drop in 2. We'll let the chat decide. I'll look at the answers as they come in. But Drew, do you have any opinion on CleanSpark while we wait for the chat to get their vote out there?
Yeah, I think it's super interesting. I heard about the Bitcoin stuff going on. You know, if you think about it, Bitcoin is an energy problem as much as it is a tech problem. Bitcoin is actually horrible for the environment. They use so much oil, gas, and all that stuff. So it's so interesting to see a energy company like CleanSpark investing in it. I think if they're able to do it and Bitcoin sustains, yeah, this thing's going to run. But you're very betting on the price of Bitcoin, which looks extremely bullish right now. But we've seen these Bitcoin rallies go up and down, and I expect the price of CleanSpark to follow that and be super volatile. But in the long term, I like it. I definitely do.
I do stand to disagree on the energy consumption bit. I know a whole lot of Bitcoiners. Some of them brought in at like $10. Some of them I know. I would say, even though a lot of institutions have been buying Bitcoin, the amount of Bitcoin getting sent, which uses the network, is actually remaining the same. So Bitcoin's energy consumption is not as bad as it may seem. In reality, is the network isn't really sending more and more coins to people. It's more kind of holding the coins, which means less energy consumption. I would say it's a bit of a myth that it's taking up so much power. I mean, in a sense, it's even better than fiat currency. Just imagine how many governments had the printers on 24/7 a day, printing more and more money in this pandemic. The amount of power that's going to consume is honestly, it's going to be massive. While Bitcoin might have one of a small country, for example, of energy consumption, look at all the other countries in the world combined. I haven't seen anyone do the math on that yet. I'm sure it'll be pretty hard to find, but I haven't seen any countries just stop printing money during the pandemic. I mean, you guys, I think, are putting out another $1.9 trillion stimulus package, which all comes from Jerome Powell's printers in his basement in the Federal Reserve, just printing away all day long. So I would say all the fiat currency, in a sense, Bitcoin is more encouraging that there's going to be limited supply. If you look at fiat across history, it's not that bad.
All right, and we've got some speculation in the chat. Also, shout out Tom Nash. We shout out Tom Nash at the top of the show. It looks like he's tuned in finally, hanging out with us. But some speculation. Have you ever gotten an IQ test? No? Okay. All right. Are you going to be the next Prime Minister of England? Probably not next. I'll go ahead and answer that one, maybe a few down. But all right, the question that we asked the chat was, do we want to hear your Tesla pitch or some other stock, some other more interesting play? Nobody wants to hear Tesla, sorry. What's a more interesting stock you have for us? Let's hear it.
An interesting one, I would say one which I'm kind of more kind of a new stock for me is Shift Technologies. SFT.
There it is. Let's go. We got speculation in the chat that you were going to pick this stock, which means that we've got some followers and some fans here. All right, guys, ticker SFT, Sierra, Foxtrot, Tango. All right, keep going.
All right. So Shift Technologies went public through a SPAC. The stock really probably wasn't, it's not an EV stock. It's nothing sexy like that. So and then the stock really did drop down substantially since then. It dropped to a low of 6.48. I think I've got an average about $8 on this one. The Shift Technologies are a bit like Carvana. They buy used cars and sell them online on their platform. The difference between Shift and Carvana is, number one, I like the management team because they don't spend money on rotating vending machines for cars. It's just go round and round, and who knows how much that will cost.
Shot at Carvana. Okay, keep going.
Yeah, and they also, by looking at all the metrics, they're much cheaper than Carvana in PE and all that kind of stuff. They're currently in 6 cities right now across the United States. Very small company. They have plans for expansion very soon, and they're going to be expanding into more cities every single year. I think it's more like 5 or 6 cities. This is expanding at a very rapid pace. I think it's extremely undervalued to the competition. For me, this is something where the market might not realise the potential very quickly. It might take a while, but when the market does realise it, I think in the next 5 or 6 years, this could be a $40, $50 stock. The management deliver. My one thing about this stock is they did their first ever earnings call a few months back, and it was chaos. The management's first ever time doing an earnings call. They couldn't understand what the analysts were saying. I'm sure that will get better over time, but I really like the stock. I think it's severely undervalued. And, I buy in shares. I think I've got about 8% of my portfolio in this one. Something like CleanSpark, which is higher conviction, is 22%, which is around the same as Akamoto. But yeah, I just think this one could be a really nice kind of play, which gets some hype on it. And as long as the management team can deliver in the next few months, the stock could catch momentum.
All right, there we go. Ringing the cash register. Somebody in the chat said, can we have his parents on? I want to know their secret. I've actually gotten a sneak peek. I talked to his mother last week, and she said that it was all him. She didn't push it at all. It was all him. But all right, let me ask you this. Car lots, ticker LOTZ, Lima Oscar Tango Zulu. I'm not super familiar with either business, but they seem pretty comparable. Is that fair to say?
Wait, what stock? Sorry, say that again, Luke.
Car lots.
Car lots.
You gotta know this one.
Give me a rundown, and then I'll see if I remember them.
No. Look it. You don't know this one? It's another SPAC play.
Car lots.
All right.
I don't. Honestly, with these SPACs, every single SPAC I take 5 minutes to look at. I read 5 minutes of the investor presentation. I read some articles, and in 5 minutes is.
So I think that this
online.
One is very similar to SFT. I don't know that because, again, like I said, I'm not super familiar with either business. Car lots, I believe, was a Ripster stock. I'm not sure. It was someone from Atlas Gang likes that stock. But it's definitely worth checking out if you like Shift.
Yeah, I would assume car lots is quite similar to Shift just because, I haven't really heard of it, so I'd assume it's kind of a smaller play. I think it's like $9 something now, isn't it?
Which one? Car lots. Let's zoom it out and
see.
It's post-merger $9.74, so right around
$9.74. So I would assume it's kind of a similar situation to Shift with car lots. I think you might be able to get Shift a little cheaper than them, but I would say a very similar graph. I'm sure it probably follows the price action of Shift more or less. Below $10. I'm always looking for kind of the value plays at the moment. A little one right now is ticker symbol MLA, I think. There's a rumor with that one. It's trading at $10 exactly, or around them.
Which one? Give me the ticker again.
I'm pretty sure it's MLA, if I recall correctly. I may be wrong.
I need another letter, I think.
I'm not 100%.
All right.
Yes.
All right.
It's cool.
So we'll follow up on that one, but definitely take a look at lots. Lots is definitely an interesting one.
Yeah, I will 100%.
All right. Cool, man. All right, MLAC. Somebody gave us the ticker. There we go. Shout out John Doe in the chat. MLAC. And guys, smash that like button for Young Investor out here giving us these picks. Again, with the Kathy Wood day, I'm like, let's have Young Investor on because he's inspirational. He is the GOAT. He will be running England, 40 years from now, 30 years from now, maybe even 5. Who knows? With the current state of things. But all right, MLAC. What was interesting about this one?
Yeah. So this one I've done light research on. So this is a SPAC which is rumored to be merging with what is basically the Netflix of Southeast Asia. So I do find this one interesting because Southeast Asia is such a rapidly growing economy. I think you might have talked about the stock a few minutes ago. Sea Limited, which is in Southeast Asia, basically the Amazon of Southeast Asia with all their banking services arena. I was in the stock a while back. I did unfortunately sell, so that might be a missed opportunity. But I think this one's not going to be watched. Isn't going to collect hype if they do announce a merger. I'm not in it. I do want to wait for an official merger announcement, just because it's at 10. So it's not really worth investing in something which is not going to really get any hype immediately. But I think the business had around 2 to 3 million users, the one they're rumored to be merging with. This is basically Netflix Southeast Asia. They had around $14 million in revenue last year, according to financial filings. So no, I can't be 100% sure they're legit. I would say it's a lot better than 80% of the vaporware in SPACs right now, and all the EV SPACs, where if you create an EV SPAC, get some battery tech, and then you instantly qualify for a $3 billion valuation. At least this one has revenue, and it's growing over 80% year over year. So if they do merge, it might be one I'm definitely going to look into.
All right. I like it, man. We asked for one. You gave us 3. There's the air horns for you. The chat's gonna drop you some likes in there. All right, and let's drop your Twitter in before you hop off, so people know how to stay in touch. And guys, check this out. I'm trying to get our SOS expert on here, right? You can see on my screen. I got the wrong window up. There we go. All right. Ryan's going to come on and talk SOS. I know the Zoom is small, but he's going to come on and talk some SOS for us. See, look at him on it. He's got a call at 12:30. He'll let us know when he's done. But all right, young investor, let's get your Twitter link so people can stay in touch. They can follow along. There it is. Boom. All right, it's going into the chat. Any final words of wisdom for us before we have to say goodbye?
Yes. Smash the like for Benzinga's YouTube algorithm. I don't know how many subs these guys are. I think it's around 60,000. They do around 4 or 5 shows a day, completely free. I assume compared to other channels, 150,000, they've got such a wide variety of shows. I think they would greatly appreciate if everyone smashes that like button for the almighty YouTube algorithm.
Okay, I love it. We even get the plug. Let's go. All right, man. Thanks for hopping on with us.
Thanks for having me on, Luke.
All right. Drew, how was that? Pretty impressive, right?
Yeah, I'm rethinking my life right now, Kid is an absolute killer from Great Britain, sounds like. So, love to see it. Back on. He can't get enough of us. He'll be back soon. I know he will.
There we go.
But very inspirational, Everything from young investor Kathy Woods. We got it covered at Benzinga today.
There we go. All right. So again, guys, if you're just tuning in, Kathy Wood, probably the most influential person in markets, except for maybe our young investor there, coming on at 2 o'clock Eastern. That's the countdown. What is that? 70 minutes or so from now. But before we get to Kathy, we're about to bring on a special guest, Mr. Jack Hurley. We're going to do an interview with a public company CEO in about 15-20 minutes from now. I've got a new stock pick. I'm going to be going through some analysis on a new stock that I don't have in the portfolio now. I'll be buying it live on the show in the live brokerage account that we look at every single day on this show. So if you're not subscribed, you're missing out. This is the most transparent show on the stock market. Again, look at down $1,000 today. I'll call it out there, let you guys know. It's mostly because of Rocket. I've owned Rocket since the IPO. It's pulling back today. We'll get to Rocket. But all right, let's bring our next guest on here, Mr. Jack Hurley, adding him onto the stream. There we go. What is up, sir? How you doing?
Good. How you guys doing?
Doing well. I was excited to have you here on Kathy Wood Day because you dig deep, you look at new technologies that are exciting, and you give us stocks that nobody's heard about but until you mention them.
Yeah, that's you typically want to be ahead of the curve and talking about something that no one's really interested in before they're interested in it, And Kathy's certainly one of those people that's going to talk about something that's not as popular and give reasons why it should be. And then I'm sure in 5 years we'll all be saying, man, why didn't I think of investing in that earlier, right?
Yep, 110%. So I guess maybe give us a little bit of background on your process and how you think about things. And then also, let's get into some names that you like and think are interesting right now.
Sure. So process-wise, I would just tell any investor to read as much as they possibly can. So my pace of taking in and learning information either about a business, a sector, or like a macroeconomic trend that's changing or shifting is probably on the order of about 200 or 300 pages every 2 or 3 days. And so a lot of people spend their days on social media or going and doing some activities. I still do plenty of activities during the day, but I block out time a day, an hour or two, to just sit down and read about a business or a sector to understand it better. And so the more that I learn about something I want to invest in, the more I'm willing to put capital in. And so as an example, hydrogen was a topic I like to talk about maybe a year ago, maybe 2 years ago. And I, over that period of time, read about probably 20, 30 companies that were involved in hydrogen that did not include the typical fan favorites like Nikola or some of those alternatives, but really looked at the front end of the infrastructure for hydrogen, right? And so I'll typically look at those things and read about them for 6 to 9 months continuously to get a good idea of the sector. And then I kind of pick which horses I want to bet on.
So you're not doing research for a few hours, right? And then making a transaction.
No.
You're looking that's what Drew does, right? But you're looking at the stock for 9 months.
Yeah, I'll look and read into it for sometimes years. I mean, if you think of something like UAVS, I mean, I started reading about them when they were 30 cents. I still read about them till today. And so that, it's an ongoing process. I may not do it in such great detail as I used to, right? I mean, I used to call their investor relations monthly. But now maybe I'll call them every other quarter just to get kind of a litmus test of where their business is. But if there's a young business that I'm looking at today, I'll be calling them maybe every month or every quarter to get kind of an update report. And so there's a couple of them that are in my bucket now that I'll be calling
Jack,
for the next,
your
6 to 9 months and reading on them for 6 to 9 months.
Jack, your audio's cutting in and out on me. Are you getting the same thing, Drew?
All right, let me. I'll turn it off.
The Matrix is glitching a little bit.
The glitch in the Matrix. All right.
There's always technical errors with Jack.
All right. Well, while he's getting. All right, Jack, you're muted now. We might have the issue resolved, but you are muted, and you're wearing a Bloomberg jacket. Come on, man! Don't do this to me. We need to get producer AB. Will you please get Jack a Benzinga hoodie? The Bloomberg one is bullshit. But all right, keep going.
Can you guys hear me now?
If we haven't fixed. Yeah, that sounds good.
The envy of businesses competition makes them all better, right? So I think Bloomberg's a hell of a business. Benzinga's a great business. They're all good businesses.
Wait, Jack, we lost you again, man.
I think this time I'm getting booted out.
Mentally lost.
So yeah, process is important to not overpay for business. I say that all the time. And so the reason I read so much on a business is because I'm constantly looking for what my justified price of an entity is. And so I'll spend 6 to 9 months making sure that my number is my number. And if it's not at my number, I don't buy the security, right? And so part of that stubborn nature of not overpaying for the asset, there's going to be moments where you never get the launched rocket and it's off of the pad and you can't chase it. But I think part of knowing where your lower and upper limit is a key distinguisher between those who have a security at 1,000% gain versus ones that are sitting on daily charts and trying to squeeze out profit.
All right, and Jack, your audio is still cutting in and out for us, unfortunately. So I don't know. Do you have levers you can pull to get us a cleaner audio stream?
I'm gonna leave and come back and see if it gets better.
All right. You do that. All right. Let's do this, Drew. We'll give Jack a couple minutes here to try to get his audio sorted out. Jesus Christ, Neil Hamilton. What's the Bloomberg hoodie? We already got all these Bloomberg comments, Neil. You're late, but let's hit the Benzinga Pro giveaway, guys. Here's how we like to do things on the Power Hour. Again, this is the fun show of the day, the stock idea show of the day. That's why we need Jack back to get his pick. If not, I'll pitch my stock that I'm adding to the live portfolio. But all right, we're looking for 250 likes on the stream. Whoever has the chat comment, the closest chat comment to us hitting 250 likes gets Benzinga Pro for a year. That's the move there. Pro.benzinga.com. A year, dude. What, should we make it a month?
No, they better smash that like button though.
Yeah, exactly. All we're looking for is 250. Whoever has the chat comment closest to us hitting that 250, they get it for that year. Let's go. Let's get this thing fired up. Again, guys, if you're just joining us, we had our young investor on. We talked about Chem Farm, SE, SOS, a handful of other stocks. And Kathy Wood is joining us. Oh, shit. We're about to hit Drew. It's coming. I'm watching it. There it is. All right. I have our winner. So, sorry, guys.
Get that thing to 3.
All right. We'll do 2 giveaways. We'll do one at 250, one at 300. It happened too fast. The first winner, J-A-Y in the chat. You are the winner. It's Power Hour at Benzinga.com. I'm watching this thing for 300. All right, we're 276. You know, 24, and we'll do it again. But Jay in the chat. That's the next. You are the first winner. Because it's Kathy Wood Day, Jason Raznick's gonna be pissed, but we'll do 2 giveaways. Oh God, it's ticking up, Drewski.
Tell them to share it. Get the friends. Get your friends.
And I'm
get your
gonna put
family.
my Ford up on the chart. Let's go, Ford. Come on, Ford.
Have your dog open up a YouTube account, maybe. Anyone that has a pulse.
See, this is fun. I love these Benzinga Pro giveaways. I'm just blessed because I work here. I guess I can extend the favor a little bit by sharing it. All right, we're 5 away, Drew. We're 5 away. We got Mr. Hurley back with us.
Looks like we hit it.
We hit it? Oh, I see it. All right, I see it. Rand-Pre.
I see some unliking. You can't do that.
Yeah, that happened last time too. Everybody unliked it to run it back up to 300. But all right, Jay in the chat, Rand-Pre in the chat. You guys are the winners. The email address, powerhour@benzinga.com. Again, that's powerhour@benzinga.com. You guys are the winners. We'll do another Benzinga Pro giveaway. All right, if it's back by popular demand, we'll do another one. I love it, guys. All right, I think we've got Mr. Jack Hurley back with us. Let's test the audio.
Hey, can you guys hear me?
Holy crap! Wow, that's way better.
All right, good. Glad to hear. So, what was the topic at hand?
You're about to give us a hot-ass stock pick.
Oh man, one of my favorite stocks, my favorite stocks of all time. There's a couple businesses that I would view
Jack,
as.
we're losing you again. Oh God.
So, I mean, there's a few businesses. Is the audio okay? Because it's also breaking up on my end when you guys talk. So I think it's just it might just be a capacity issue for the network.
All right, Jack. We might have to wait till tomorrow, and in the interim, I'll do my stock pitch. I think.
No problem.
All right, can we give it a try tomorrow? All right, we lost Jack, unfortunately. I know we got all these dislikes in the chat. We tried. Yeah.
Listen, he's a great investor. We just have to have him invest in some great fiber optic cables. We'll be like seeing Jack in 5K, 8K, 27K.
Yeah. There
RKT fiber, maybe?
RKT
fiber.
There we go. All right. Here it is. You see what I have up on the screen here, Mr. Drew?
Of course.
All right, so we're gonna use 2 tools right now. We're gonna use the brokerage, right? The live trading account. All right, we're only down $900 today now. We're looking up a little bit, and we're also gonna use Excel. Requested yesterday. Let's do a lesson on selling puts. Let's talk about selling puts. I love selling puts. I've actually made maybe more money this year selling puts than anything else. So let's talk about that. We've got about 7 minutes or so before our next guest is joining the stream. So I'm going to go through it quick, guys. This is a new stock, a new ticker that I am adding onto the portfolio. And again, we're going to click back over to that live account and do it. But all right, selling puts, hopping straight into it. Fubo, F-U-B-O, Foxtrot, Ukulele, I believe. Bravo, Oscar. That is the stock that I'm getting long. I'm getting into this thing. F-U-B-O. There it is. That's where we're gonna start with on the spreadsheet. Okay. and we're going to sell puts, which means that we're getting synthetically long the stock. When we choose to sell a put, we're not buying shares outright. Instead, we're taking a credit cash to our account today. As long as the stock is above the strike price at which we're selling the puts, we walk away with that cash. We're happy. The stock price falls below the stock price falls below the strike price that we sold the puts at. We are forced to buy shares at that price. That's the risk that we're taking on. But of course, how can we sell puts if we don't know what strike price to choose? All right, so let's back into this thing. All right, Drewski?
Let's do it.
And we're moving quick. So instead of looking up all the numbers together, I'm gonna just pull some of them out of a hat, sort of like I was on a cooking show. But all right, let's start doing this thing on Fubo. So
2.4.
First things first. Fubo has a $4 billion market cap. Right, that's where I'm going to start. I'm a big ratios guy. We're going to start with the $4 billion market cap on Fubo. So let's throw that 4 up there with 9 zeros after it. 1, 2, 3, 4, 5, 6, 7, 8, 9. All right, there it is. So we'll turn this into dollar format to make it a little bit easier for us here. All right, so Fubo, $4 billion market cap, and we got room to do another zoom here. Let's do that. All righty, and we have news on this one yesterday. So I'm going to set up time period. Revenue change and EV to sales ratio, enterprise value to sales. Okay, or I guess we'll do price to sales because we're using market cap. Okay, so we got news out of Fubo yesterday, and so I'm going to show you guys how in Benzinga Pro I can go and find that news that came out of Fubo. Here it is, FUBO. Alrighty. So check this out. I'm gonna click over to my press release section. Yesterday after the close, Fubo put out a press release announcing a shareholder letter for us. We're gonna go ahead. We're gonna click through to that shareholder letter. And again, because we don't have unlimited time, I'm gonna hop to some of the items that I pulled out of this. So one thing we found out in their shareholder letter yesterday, they made $268.8 million of revenue in the year 2020. So let's plug that in. 268,800,123. Okay, another thing that we got out of the letter yesterday is 2021 expected sales. They gave us some guidance. They said they expect to make at least $460 million of revenue next year. And then we looked ahead at the analyst consensus, and the analyst consensus is that they're going to make $752 million of revenue in 2022. Okay, so the update on Fubo, guys, yesterday, again, they put out a shareholder letter. They gave us updated guidance, which was better than what they had previously given. So the updated guidance was they're going to make $460 million of revenue next year. And then they said the part that the market's hammering it, the stock's down 12% today. The part that the market doesn't like is that they're not going to have their gambling update or their gambling product rolled out until Q4. But all right, I always like to calculate revenue growth here. In the investor letter, they told us that they had 83% revenue growth from the previous year. And then let's just do a little bit of calculation here to back into what this revenue growth looks like for 2021 and 2022. All right, so the company expects to have revenue growth of 71% next year. Analysts expect 63% from 2021 to 2022. Make this percents for you guys. All right, and now let's use one of my favorite ratios in valuing a company that has negative income, which is our price to sales ratio. So to get this, we just look at our market cap and we divide it by the revenue. Pretty simple there. Hold on, I gotta lock in this. All right, and again, we're moving quick. If you guys want to replay this video, you will be able to, and maybe even I'll send out the spreadsheet after we're done. And this one is a number, not a dollar value. So OHN number. There we go. All right, so check this out. So we know that the stock is trading at 14.9 times price to sales based off of last year's earnings, 8.7 on what the company expects to earn in the upcoming year, 5.3 for the year after that based on analysts, okay? Now again, we're selling puts. That's why we're doing this. We need a strike price to sell the puts at. Again, I only sell puts on stocks that I'm okay owning for the long term, and I want to own them at a discount for what the stock trades at now. So let's give it the least sexy, most conservative stock that we could compare it to, which is Disney, a company. Disney does own part of Fubo. So we're going to use Disney as our comparable, all right, to figure out what do we think is a fair price for the price of Fubo, or at least throw us in a ballpark. So Disney has a $356 billion market cap.
It's a lot of zeros.
That's a lot of zeros. I think I did it right. Let's see. Is that right, Drewski? Yes, it is. All right. Oh, we'll make this all bold too. There we go.
The University of Michigan really taught you some great Excel skills, Luke.
Yeah, man. You got to learn all the Excel skills. So, all right. And again, we're going to be comparing this stock to Disney. And guys, I wish we had more time for this, but we are flying today on Kathy Day. So all right. Disney, we're going to look at their 2020 sales, 2021, 2022, where we want to make this an apples-to-apples comparison. And I'm just going to go ahead and paste in what Disney made in 2020, and then the analyst estimates for 2021 and 2022. There you go. So they made 65 billion in 2020. And then let's check this out. There we go. 69 billion expected in the upcoming year, and 86 billion expected in 22. That's some post-COVID. So there we go. There is our growth percentages. So I want to look at how quickly is revenue growing between these two. Did Kathy cancel? Somebody's asking. No. If you're just joining, Kathy, 2:00 Eastern. That's when she's coming on, guys. All right. So let's go ahead. Let's look at the price to sales ratio here on Disney again. We're looking at Fubo, in a very, very high growth stock, right? Look at the revenue growth over there. I'm going to highlight that now in Fubo. Here's the revenue growth. Here's Disney's. And here we're comparing an apples-to-apples multiple. There we go. All right. So check this out. I like to use the upcoming year numbers, right? The companies that have given us these. Fubo is trading at 8.7 times price to sales. So that means that you're paying 8.7 times for every dollar of revenue that they have. Disney is trading at 5.2 times price sales. That means you're paying 5.2 times for every single dollar out there. So Disney's Fubo is about 67% more expensive than Fubo. The question is that reasonable? And quite honestly, when you see a company that's growing at 71% on the top line year over year, the answer is probably yes. It probably is pretty damn reasonable. That said, I like to be a bargain shopper. Whenever I get some Kohl's cash or some good discounts, I'm hitting those, Drew. Let's make this a little bit more reasonable. All right. So let's just run some quick math and see. How much more expensive is Fubo than Disney per this multiple, right? And we're going to show that Fubo is 67% more expensive than Disney. So I want to take a little bit of a haircut on that, right? I want to put a 25% discount on that price to sales that Fubo is currently trading at, even though it's down right now. So let's figure out exactly what that would be. So if we're saying that, all right, we're saying that we want to put, and sorry, I got to go look up a price real quick, guys. I just don't want to leave our next guest hanging. So I want to get in there. But all right, so if we're putting a 25% discount on the price to sales ratio that Fubo is currently trading at, and again, I think that their current one is actually probably justified because again, the stock's growing at 71% there. But if we take a 25% discount on their current price to sales ratio, that spits us out, and sorry, I just did some calculator math, that spits us out a price target, $27.42. Okay, right now, if we go and we look at the price of Fubo, we see that the stock's trading at $35.62. I want to buy it, for 25% more expensive than what Disney's trading at. I can't do that right now. But what I can do is I can sell puts against the stock for that $27 strike. All right, or we're gonna be able to get close. So again, we're in the live brokerage account. I'm gonna click over to Fubo. There it is. I'm gonna go ahead and open up the option chain here. I'm going to go out how far? We're going to go out 23 days. I always like to keep it within a month when I'm selling puts. And let's find the strike that we want. 29 bucks. Okay, so check this out. You know, we're basically saying we think Fubo is worth at least 25% more than Disney, not on the dollar-to-dollar comparison, but on in terms of what you're paying to acquire a share of the stock per the revenue that each company earns, right? And so that gives us a $27.42 price target. And I think there's almost no way that I can lose on this trade, right? You've got a stock that's growing at 71% a year. We're comparing it to a stock that's growing at 5% a year and saying we're only going to pay 25% more for each dollar of revenue that the stock generates. Okay? So if we look at this $29 strike put, we see that it's trading at $1.50, right? 29 minus $1.50. What does that give us, Drewski? 27.5. Right freaking on point with that price target that we came up with, more or less. So I'm going to go ahead and sell a handful of contracts in this thing, right? I'm going to sell 5, but I'll talk through the example as if I'm selling 1. So if you're selling 1 contract in this stock, right, you're getting synthetically long it. We're selling puts. Again, we're selling puts here on Fubo. It makes us long the stock. We now want the share price to go up, but for every contract you sell, you get $150 credited to your account today. And the risk that you're taking on is you're agreeing to buy shares of Fubo at $29. Again, I am okay doing with this because I think that you know the stock 25% higher valuation ratio than Disney, who's sort of a giant. It's not going to double its revenue over the next year like Fubo could. I think that's totally justified. So there we go. There is the new trade on the portfolio. I promised you guys one. Let's hit the air horns. Let's hit the ka-ching. There we are. We're filled. We even got a better price than I was quoted. $1.56 on that Fubo. And we are in it. Shout out to Third Wave. Gave me something positive. Guys, smash that like button for me. I'm about to bring our next guest onto the show. That's right. That's right. We're about to bring on Steve Bronson, CEO of Interlink, ticker LINK. Let's go ahead. Let's pull the chart up here. LINK, Lima, India, November, Kilo. Adding him onto the stream now. There we go. All right, Steven, what's up? Welcome to the Power Hour. Good to have you here.
Thank you for having me.
Absolutely, absolutely. And you're the CEO of Interlink, again, public company, ticker LINK, Lima, India, November, Kilo. Tell us a little bit about the company and you know what you're most excited about.
Great, thank you. Well, the company is a pioneer in printed electronics and sensor technologies. It was founded in 1985, but I'm very excited about where we are today and where we're going. We're a fully integrated sensor technology solution organization. So our roots are force sensing resistors. What are those? And I like to show a little demo to the audience out there, but this is a sensor. As I press on it, it's detecting the force or pressure. And this is a resistive-based technology. So for all of us who carry at least a cell phone out there, this is capacitive technology. So it's detecting touch, where our technology is detecting force or pressure. And we have a very rich history of not only selling standard sensors, but also solutions based on our resistive-based force sensing technology. So we have some neat gadgets. We're in power tools. So we design a clutch sensor. So if the user wants to adjust the level of torque, they adjust it. It's our clutch sensor behind that's detecting that adjustment. So
wait. Okay, sorry. I'm the guy who always slows everybody down.
That's okay.
So the sensor that you create, that's the one when I'm adjusting my drill, which I don't own a drill, but I probably should.
Okay.
I'm an adult now. I probably should own a drill, but I don't. Okay. But your sensor is the one that's picking up on me adjusting the torque.
Correct.
Okay.
So adjusting the level of force that's being applied.
Interesting. Okay. All right, so we have the drill application. Could you give us a couple of other applications? I think that would be
sure.
helpful.
So we also have a touchpad solution that's based on our core technology. So, for example, Panasonic Toughbooks, they're fully rugged Toughbook models, uses our touchpad technology. And the reason is because it's a resistive base, it's detecting force and pressure versus touch. So the user could be wearing a glove. If you're in a cold weather, typically your cell phone's not going to detect touch if your hands are cold. With a resistive-based technology, since we're detecting force or pressure, it's going to work even in harsh temperature environments, or whether the user's wearing a glove, or whether you spill liquid on it. And we work with not just force and pressure sensing, but also position sensing. So for example, if we want to detect not only the level of pressure and force that's being applied, but also the position. So when I move my finger up and down, it's detecting the position. In addition, we work with not only our existing technologies, but we combine them with other sensor technologies, creating a multi-sensing fusion platform. So in essence, because of our rich history around our core sensor technologies, we know how that works with other related sensor technologies. So we deal with Fortune 100, 500 customers and smaller customers, and they don't want to just buy the standard sensor. They want a complete solution. So for example, we delivered for over 5 years in a leading electronic vehicle manufacturer. They used our sensor technology, and I'm showing the actual device that detect the force or pressure that was being applied to the door handle. So therefore the door handle would present itself. And
that's pretty cool.
And
we all know which one you're hinting about.
Exactly. And so you got to look at it that we're replacing a dummy mechanical switch with an intelligent solution, intelligent switch. So in this application, you don't want a pebble to hit the door handle or the door handle to pop open. So you have to know the difference between deliberate and accidental force. And with software in-house, we can make that determination because everything has a signature pattern. So what I mean by that is the force that a pebble is going to hit the door handle is going to be faster than the human force. And so we understand not only our core technology, our sensor technology, but the ecosystem that we play in. So for example, and I like showing examples because it's easier than me just talking to it, but this is our sensing element that's used, and it's around the metal frame. But now if we put it in this big foam and rubber device, it's actually used by a leading medical equipment manufacturer in their radiation oncology equipment. So when the patient's laying on a gantry and this device is going against the patient to detect a part of the radiation therapy, if the patient moves, it detects that force or pressure with our sensing element built into the bumper system, or the frame, I should say. So we have this very rich history since we were founded in 1985 of delivering very critical, complete sensing solution packages that requires really high performance and high reliability.
Okay, and guys, if you're just joining us, the company that we're talking about, Interlink Electronics, ticker LINK. Great ticker, by the way.
Thank you.
And everybody's making fun of me in the chat for admitting that I don't own a drill, so that's the last time I'll open up about anything that's not stock related.
Don't feel bad. I'm not allowed to use a drill in my house. I do usually more damage.
All right, let's ask Drew. Drew, do you own a drill?
I do not. But I'm a college student.
We'll get on that, guys. Yeah, Drew's our college trader. Steven, so you just took us through some of the current applications. I'm curious about, what are some of the future applications you're most excited about? Where do you see this type of technology going, et cetera?
Excellent. So we're very excited about the future with IoT, augmented reality, and other potential EV applications. So when I expand on that, our current sensors are used in a wearable application where it's helping in the device that's detecting a respiratory rate. And so as we see this world evolving with IoT and wearables, because our printed sensor technology, and here's one of our standard sensors, we can print on different substrates and materials and provide really the sensing element on whether it's clothing or other type of wearable devices. We're all used to, smartwatches. Everybody focuses on the actual screen, but you also have a lot of real estate here on the band. With the vehicle and the growth of electronic vehicles, we think there's a lot of applications both on the interior and exterior of the automotive. We've had success not only on the exterior, but we were also successful in replacing mechanical switches around the entertainment system in the interior part of the car. So as we go forward, we also think that, especially with the EV marketplace, there's a lot of chatter around batteries. Batteries are great, but if they overheat and they explode, it's going to create a headache for you. And we think there's a place for not just our sensor technology, but other related sensor technologies. So not only are we working on improving our performance on our core existing sensor technology, but we're also looking to expand in other related sensor technologies. So for example, if you combine force with environmental, so not only are you detecting the level of force or pressure being applied, but there's all sorts of types of environmental sensors that's detecting everything from the temperature, gas, different types of elements that would be important depending on the application. So we look at our world constantly evolving, and we feel we're very well positioned. And one big aspect is we're fully integrated. So we manufacture all our own sensors in our own manufacturing facility based in China. We have an R&D and engineering center that we're expanding here in Southern California. And we also have a global network, both from a distribution standpoint and key sales, direct and sales partners. So we feel, in addition to our technology offerings and our appetite to grow and expand our technology basket, we have a very solid foundation from an infrastructure to support that future growth.
All right, I like it, and I've got a follow-up question to that, but Steve, I want to let you know the chat is definitely paying attention because we have a lot of drill puns in there.
Okay.
So tell me if this is accurate or not. But I would imagine that a lot of the future of the technology has to do with the software component. What I thought was really intriguing was how you're talking about sort of the footprint between a pebble and a human hand to indicate whether or not we should, open the car up or not. Is that fair to say that a lot of what's interesting here is the future of the software development, or is it on the hardware side just as much?
No, it's actually, that's a great question, Luke, and it's a great point. Software is very critical, and it's actually a differentiator with us than potentially some of our competitors, because we deliver a complete solution, not just selling the sensor itself, but with the software, depending on the application. And in addition to the software, and we do our own software in-house, is the materials that we work with. So if you're using our sensor in an automotive application, that requires a very big temperature range. So a positive 85°C to negative 40°C, which is really an extreme variance in temperature. And you have to know what materials to work with. So the substrate that we actually print the sensor on has to be able to withstand, for example, that high heat. So it's the software, it's the materials, and it's also with our sensor technology and our standard sensor. When we print, we're also using an ink. We like to refer to that as our secret recipe, and the ink formulation that we use and some of the ingredients within that is very critical depending on the application and the needs of our customers.
Awesome. All right, Steven, and if folks want to hear more, they want to stay in touch, do you have anywhere to send them?
Yes, to our website, Interlink Electronics, the investor relations section. They can actually pull down our investor presentation, and it's pretty comprehensive.
There we go. All right, guys. Again, one more time, the ticker LINK. Great ticker.
Thank you.
So, Steve, thanks for joining us. Thanks for coming on the Power Hour and hanging out. I guarantee this is the most fun stock show that you'll join. Well, I guess I can't guarantee that, but that's at least what we're aiming for. So it was awesome to have you here. And again, chat super active and very interested in the company.
Excellent. Thank you very much, Luke. Appreciate it.
Absolutely. All right, Drewski, you're back up. We've got a little bit of housekeeping to do. I guess first things first. If you are here for Cathie Wood, Cathie with an IE Wood, the most influential person in the stock market right now, 2 o'clock Eastern, she's joining us. We're doing the countdown, guys. 2 o'clock Eastern, Cathie Wood is coming on with us. Let's go. In this run up to Cathie Wood, we are talking stock ideas. That's what we're trying to deliver, is stock market ideas. That's what we're going for, guys. I just made a long pitch on Fubo. We did an example where we sold puts. Let me share my screen again. I walked through really briefly how I come to a strike price that I like to use when I sell puts, because again, I do this to collect income now, and I only do it in stocks that I like for the long term. If you guys want the spreadsheet, I meant to say this, if you want the spreadsheet so you can sort of look at some of the formulas that we used to come up with our target prices here, and the strike price at which we wanted to sell our puts at, powerhour@benzinga.com. That's the email address to send to, guys. powerhour@benzinga.com. And then I will get this hosted on Google Drive and sent out to you guys. I just put it in the chat, powerhour@benzinga.com. There it is. Send us the email. Tell us you want the spreadsheet. Say, Luke likes Fubo. I like Luke. I'm going to follow him on Twitter. I'm going to drop that link in there too. Of course, got to get that shilled out because I'm dropping ideas there. And again, guys, Cathie Wood coming on at 2 o'clock Eastern. We are taking questions out of the chat. Good questions, market questions. Probably not this one. Does Cathie own a drill? I'm sure that she does, unlike Drew and I. Again, Drew is our resident college student, so we can't give him too much flack for it. I'm cutting over to the office cam here. Let's see, Jason Raznick. We don't have him on screen yet, setting up for the big Cathie interview at 2 o'clock Eastern. But guys, final thing that I'm going to ask you guys, if I have to do the work to send out the spreadsheet to all of you, again, powerhour@benzinga.com is the email address. I'm going to ask you, hit the like on this stream, share this stream. We want to get this run up for Cathie. The more viewers we have on here, the bigger the audience that she can talk to, the more likely she is to come back. And again, we're doing this different. This is no CNBC interview where it's all formal and stuffy. We're just jumping straight into the questions that we know people want to have answered. And we are pulling questions out of the chat, out of the community, out of Zingernation. That's all of you out there. So please share this like, put it on Twitter, put it on Facebook, put it on wherever, your Discords, your whatever it is you use for your trading community, okay? Hit the like button on this. And again, guys, stocks we've already talked about today: KMPH, SOS, SE, Fubo. Some that we haven't talked about, Drew. What do you want to do next? And guys, I believe we're gonna have Tom Nash, Mr. Deep Value, Mr. Analysis, joining us shortly here. So shout out to Tom Nash if you guys like him. But Drew, I've got a couple tickers that I'd promised that we would talk about today. And actually, I'm gonna throw this one out to Zingernation too. What if we could only ask Cathie about one of her tickers? Which one is it? Drop it in the chat. Drop in the chat. Either a ticker that she owns now, or one that you think is a good fit for her. Drop that in the chat. I'm curious. But all right, Drew. I promised we would talk about Peloton, Neo, and Rocket today at the very least. Of those, which one do you want to start with?
So I think this is going to be my last stock. I got to dip around 130.
Why?
Got to head out. Bye, Felicia. I guess I'm a resident college student, unfortunately.
Are you leaving us to go to class? Because if so, that's a waste of time compared to Cathie Wood. You're gonna pass up Cathie Wood to go to some useless college
I
class
know.
that's virtual. It's a virtual class.
I might have to. I might have to
You
drop
are
out
fake
for
news.
Kathy.
Hold on.
That is fake
You are
news.
fake news.
Yeah, there we go. All right, you're not leaving, but all right, which ticker do you want to do?
RKT, baby.
All right,
Home of Detroit.
I was
Repping the
hoping you'd
Michigan
say
today
that
for
one.
our boy Tom Nash. You know, I knew he was coming on the show. I had to do him.
Yeah, but he's not here. Producer AB, maybe Tom Nash isn't actually joining us.
Go Blue, baby. If you're a Wolverine, let's hit those likes to 500. And also, I heard Kathy Woods only joined streams with 500 likes. So it's kind of in your guys' hands to get that up, right? It's not even on us at this point.
Yeah.
We already talked to her. She's in the Slack. She's like, it's not at 500 yet. Can't join.
Yeah,
So.
and everybody's saying Palantir. That's definitely seems like the favorite for everybody to want to ask her about. PLTR. Probably could have guessed that one. But all right, hot take on Rocket. I've got an opinion on this one. But give me your take, Mr. Drewski.
All right, I hope you guys don't hear that printer in the back. But RKT, the mortgage industry is getting kind of flipped on its head right here, right? You got two big companies. Don't even worry about the other one right now. RKT is the number one, all right? Yeah, they ran up. They had a little short squeeze. The Wall Street bets people, right? They see value. Same thing happened with GameStop. They saw value at like $5. Deep fucking value. I don't know if I'm about to say that. I just did. Whatever. He saw value. He bought in. Everyone, pushed in, and it got short squeezed like wow. Same thing happened here, just on a smaller scale, right? This thing didn't go to 10,000, maybe like GameStop kind of did. But this thing, it doubled in a day, basically, and now it's pulling back. So is the value still there? Yeah, I know. I think under $30 is pretty solid value. Look, yeah, Royal Bank of Canada announcing a price target of $30. Is this thing going to sell off more? Who knows? But what I can say is, just keep on averaging in. If you look at their last quarter report, I think they had almost 300% year over year sales growth. That's insane. I think it's like 293 or something. It is insane growth, people. You got to own a stock like that, right? Obviously, the mortgage industry was on fire with COVID. Everyone's refinancing. Everyone's moving out of the city. Everyone's getting a house. But still, this thing is, very, very small part of market share. They're only going up. They're number one, baby. They're going to stay number one. And that's my take, Luke. Did I miss anything? Is there anything else you need to add? Let's hear it.
Yes. You are our resident, younger person on the stream. I guess I'm sort of a resident younger person on the stream too. I'm 28 years old, so I'm not like in that college age like you are. But all right, what's the social beat on this thing? I mean, give me a sense as to where the social community is at on the stock. Again, guys, GME, we were the first ones to sort of bring the GME battle to the market. We had Citron Research on here live versus Reddit live on this show. So if that's not enough for you guys to subscribe to the channel and hang out with me every day, then I don't know what is. But Drewski, what's the social beat on this one? And we are going to have Ryan on here in a minute to talk some SOS. But Drew, what's up with this one?
Yeah, so this stock first was taken off during IPO. Everyone's like, rocket to the moon. It shot up to like $30. I was like, okay, Detroit versus everyone. We got this in the bag. It was on Wall Street Bets. It was on StockTwits. It was going off.
But is it still a Wall Street Bets? Is still a StockTwits favorite?
So for a while it was not, and it kind of traded in that range. And then all of a sudden, recently people started to see, it has like a 7 PE ratio. It just didn't make sense. So then Wall Street Bets started attacking again. It had I think around a 40% short interest, and that got eyes of Wall Street Bets, right? So people started seeing that. They started buying in, and that's really what moved this thing up to, $48 at one point. So it's kind of starting to sell off right now again, but it's still in the eyes of a lot of Wall Street Bets traders. The social is hot. I was jumping around Discords yesterday. People were saying, I'm going all in on Rocket. People were buying this up. It was the stock of the day yesterday. It was the stock of the day.
Yep, absolutely. And I'm trying to see here. Do I have I'm looking for my average price on this one. It's somewhere around 18. I don't know. But all right. Rocket, I'll give my opinion on it, guys. I have been long this stock since the IPO. My average price is somewhere the IPO price was 18. The stock opened at around 18. I bought shares somewhere around 18.50, somewhere around there. I've been in this thing for a while. I am holding on to this stock, and I've got now 2 reasons why, and I've talked about this one, a ton on this show. So if you're a longtime listener, I apologize, because you're going to hear the same pitch over and over that I always make. But if you didn't know, Benzinga is actually in the same building as Rocket, our ticker RKT, right? And I see with my own eyes the machine that they have made. Rocket is the largest mortgage lender in the market, or in the country rather. Sorry. And I see the machine that they've made from automation to sales processes to customer service that they've put in place for mortgages. And what I think is really interesting about this story is that this machine that they've built can be scaled to many other financial services, right? That they basically say, our company is interesting because we take the complex and annoying and hassle some, that's a new word I invented, hassle some mortgage process, right? And make it easy for people. That's what they do. That's why they're number one. That's why they make a ton of revenue. All right. And so I think that there's no reason why they can't scale this out to an array of financial products, and first financial products, and then to other products, right? Why can't they do this for personal loans, for auto finance, for that sort of thing? That's why I think Rocket is so interesting. So I'm in the stock for the long haul there, right? It's not just mortgages. There's more mortgage share that they can gain, sure, but I think it goes beyond that. Reason number 2, $1.11 special dividend. I'm going to grab that dividend, great little boost there. That definitely kicks some shorts out of the stock, caused a little bit of a short squeeze in that crazy run-up. I mean, it was about 100% run-up that we had over the past several days. So there's my thing on Rocket. Do I own it? Yes. Am I still in it? Yes. Have I sold a share yet? No, I have not. And so, Drew, you said you've got to go. But I've got 2 guests to hop on with us. Again, guys, if you're just joining, Kathy Wood, 2 p.m. Eastern. Let's go.
Bye, Felicia.
And there's your exit, Drew.
All right, peace out. Thanks for having me, Luke. Talk soon.
All right, talk soon. All right, Ryan, I'm bringing you up, guys, and then next up we're gonna have Mr. Tom Nash, the king of value, joining us. But Ryan, okay, I needed to pull you in. I know this wasn't planned. You're at work. You're like, I'm on calls. I can't really join today, and I begged you to join us. And the reason why is because of ticker SOS. I know that you're an expert in that stock. I keep getting asked about it in the chat. I'm like, guys, I have no freaking idea about SOS. Sorry, it's not my name. So SOS. I guess, can you give us a read on that stock? Tell us a little bit about the company, opinion that you have now. I mean, the thing is mooning a little bit. We're up 29% today. We just took out a 5-day high, still off of like I don't know, a couple week high. I'm gonna pull the chart up, but all right, all you. I'm gonna go hide. Tell us about this stock, and while you're chatting, I'm gonna get your Twitter, drop it in the chat, guys. Make sure you follow Ryan, especially if you like some of these crypto stocks. He is the man on them.
Thank you so much for having me again. As always, it's a pleasure to be here. So SOS has been one of those stocks. It's been a bumpy, wild, weird ride. I spoke about the stock, I think, when I was on with Spencer about like over 2 weeks ago. The stock was like at $4. It did really, really well, went all the way up to over $12, and we were all very excited for it. Bitcoin did a course correction. It started correcting. We started playing with the 44.5 support level, broke that a little bit, came back up. And as of today, I'm just pulling up my crypto chart on the side here. Bitcoin right now is sitting at 51.5. So SOS is one of those stocks that wasn't always a Bitcoin miner. But recently, earlier this year, they kind of branched off and said, hey, we want to incorporate Bitcoin mining into our operations. And they set out and did a few offerings, strategically timed very, very, very well, because they're doing they have a lot of the same similar patterns that Marathon Patent Group had, which is now Marathon Digital Holdings had, where they would time their offerings around the rises of Bitcoin to be able to help the stock recover, because Bitcoin stocks, as you folks probably know, as Bitcoin stocks go up, as Bitcoin goes up, the Bitcoin stocks also go up as well.
Yeah, and
so
I'm going to
SOS
throw this one
both
out here really quick, guys, because I'm curious. If you guys are in this stock, drop me the one in the chat. I'm just curious. I want to get a sense. We got about 1,300 people on here right now. I want to see how many people are in this name, because they've been spamming it. But all right, keep going.
Sure thing. So this stock had its rise, and it was doing very, very well. The crazy thing about this stock was Reddit got a hold of this one. But unlike GME and AMC, where it was a darling, a lot of people started calling this stock a fraud and calling out a lot of allegations around the stock, which I personally, I never believed. And to this day, I don't think that SOS is a fraud. Even though if you see my Twitter, I'm not publicly in the stock anymore. I exited my position and took profits. But the reason, and don't get mad at me about that, I'm still reevaluating and might re-enter the stock later on. But the thing with this stock that is doing a massive recovery these past few days is Hindenburg, which is a professional short seller. They're one of the big short sellers like Citron, one of the big evil demons in the retail world, put out a short report on this stock and it's essentially attacked the stock. But the power of the retail investors came in and they one by one took apart every single one of the things that Hindenburg had talked about and kind of started tearing all the allegations apart. So, for example, there was a building 808, which was claimed to be the operating locations for SOS. Hindenburg claimed that that was a hotel and kind of took a strategic photograph of it. But if there's another photograph taken by people actually on the ground there that showed that actually, no, there is an SOS operations. There's two buildings with the same numbers. You can see this happen a lot in New York City as well, where you have front and rear buildings with the same numbers. All that jazz happened, and a lot of people came through and started to proceed on a short squeeze. So it looks like a 6K filing has been done just now. I'm seeing the screen super zoomed in.
Yeah, can you read that? Is that big enough?
Sure, yeah, I can read it.
What 1:35 is when the news is. Holy shit, that was literally a minute ago. All right, we got news on this, baby. Let's go. That's what the Power Hour is about. Hold on. We need to air horn that one. All right. We have the SOS analyst with us, and we have news out. So I mean, it seems okay. All right, this is important.
So I have the actual 6K popped up. So as we were introing, I got the filing notification from the SEC email. So it says SOS Limited is pleased to offer you the opportunity to exercise all of your warrants of all the American Depository Share Purchase warrants issued to certain investors on February 10th, 2021 at the exercise price of $4.05. So this goes along with one of their very, very first offerings where they sold warrants, and there's for some of these there's a 30-day lockup period, some of these there's a 90-day lockup period, and some of them, like their very most recent one, it's with a purchase and a time lockup period. So it looks like now they've hit a time period where they can afford to kind of pay back these warrants. It's hit the time period where they're saying, hey, if you want now, you can come and exercise these warrants. It seems like they're good for it. And of course, with warrants, as folks probably know, they purchase the warrant, so now they have to pay a strike price against the warrant to be able to kind of issue it. And some brokers, well, I think these are direct investors, so they probably don't have a fee in regards to that. But now that they can do that and they can turn those warrants into common shares, which is very beneficial for us investors that are in the game, because with a stock with a float, I'm just pulling up the float here. According to Webull, the float on this is 108 million. So it's about a low float if you want to consider 100 million a low float. So this means that they will be they'll be taking from the float now. So I assume that's how it works right now. I'm working on the fly real quick. But this to me personally, this is good news for SOS. It means that they've got money that they can afford to kind of let them exercise their warrants now, either if it's a lockup period thing or it's a affordability thing. But the big news that came out today for SOS was there's a price target out on this thing for $40. From a firm in China, put out a price target on this for $40. I believe it's Scorpion.vc is the name of them. I'm not exactly 100%
Check this out, guys. This is Benzinga Pro. We're looking at as we watch the news coming live. Pro.benzinga.com. 2-week free trial. No reason not to try it. We use this every single day. And check this out on Benzinga Pro. Whenever you have a stock that's moving, right at the very top, it says why it's moving. So look at this. SOS shares are trading higher as traders circulate a Burles research note on the stock from Scorpio VC. Again, pro.benzinga.com. I'll drop that link in the chat. So, all right. Keep going, Ryan. I cut you off.
Sure. No problem at all. I've actually been using Benzinga Pro myself, and I've been liking it a lot. So they put out a price target of $40 for this stock based off of a lot of different factors that they're considering. I haven't actually had the ability to sit down and look through all the details of this $40 price target. But of course, when a price target comes out that is so much higher than the current stock price at the time when this was released, it created a bullish effect, and now the stock is up about 30% up so far into the day. And for those who actually like this stock a lot, I've been watching this stock and kind of learning its patterns. After 6 p.m., especially if you trade on like Webull or any other platform that lets you trade after 6 p.m. This stock tends to kind of wake up a lot more after 6 p.m. So for those who are looking to take profits or those who are day trading, that might be like your sweet spot to kind of play with the stock. But this is an interesting stock as it's a Bitcoin miner. Bitcoin's recovering. It looks like it today. It could have a really, really, really good future. There's a lot of details on it, but as always, I would say I would look into this stock very, very closely. And just like any other stock that's up over 30%, I wouldn't suggest chasing it. Again, I'm not a financial advisor. Don't listen to anything I say. But I'd never chase a stock that's up over 30%. But I'm very, very, very happy for all of my friends and fellow investors and traders that are in this stock that were hurt by the short report when it came down so heavy. It came down very, very low. I'm very happy. I've been talking to them all day. They're all super excited. So I'm very, very happy for everyone.
All right. Awesome. Ryan, I appreciate you hopping on the fly. Again, I know this wasn't planned. I said 5 minutes. You gave us 10.
No worries.
Thanks, man, for coming and hanging out on the Power Hour.
For sure. Say hi to Kathy Wood for me.
All right, will do. All right, guys. Again, if you're just joining the stream, we're talking stocks. This is the Power Hour. This is the trade idea segment. That's what we do every day. We've been going almost 2 hours already. We're bringing you a special hour today for that live interview with Kathy Wood. Again, questions not just coming from us, but coming from you, everybody out there. You are Zingernation. You are what makes this possible. That's what this Zingernation is all about, guys. Smash that like button if you're excited for Kathy Wood to be here. I've got another special guest for us, ready to bring him on to the stream. I'm going to get the drum roll going. Look at that. There he is, Mr. Tom Nash. What's up, man?
What's going on, brother?
Not too much. How are you doing?
I'm loving the new set you got there. It looks professional.
Well, okay. So the new set. And guys, if you're new to this, I'm normally like standing during this show and like marching around and going crazy a little bit. But Jason took my set today. He said, I want the standing setup when I interview Kathy Wood. So I'm like delegated to the studio, which I like. The studio room's nice. It saves my legs a little bit instead of standing for 2 hours.
It looks great. It looks clear.
I
like it. It's a nice change of pace. You know what I mean?
Yeah, absolutely.
And the camera here looks better actually.
All right, so maybe that's the move. Maybe I'm just staying here every day then. I won't be as fatigued.
We'll call you Dungeon Luke.
Yeah, there we go, Dungeon Luke. It is very dark in this room. I can't really turn the camera easily, but it's there's one light that's pointing at me, and otherwise it's just pretty much just.
What's
black.
going on, brother? Are you pumped for the Kathy Wood interview? I'm pumped.
Hell yes. What I guess what are you most excited to hear about from Kathy?
Well, okay. Fair disclosure, I have a mild crush on Kathy. I mean, everybody knows that.
Yeah, that's fine.
I every time she speaks about Tesla, about innovation, about the economy, about her specific approach to investing, it's really fascinating to hear this new wave of investors. I mean, that's kind of, I see her as kind of the new wave of the value investors. It's innovation based, but it's still somewhat conservative. She doesn't go for the lottery tickets. So every time she speaks, I learn a lot of new things. I think she's brilliant. So yeah, I'm sold.
All right, I like it. And Tom, I've got to ask you this. Earlier, the drill question, okay? I don't know if you're watching the earlier interview, but we had a public CEO on here. He was talking about how his sensor is used in drills, and I admitted it was an error, but I admitted that I do not, in fact, own a drill, thus making myself not a real adult. Do you, in fact, own a drill? We got to ask this for the people. They need to know.
I own one, but every time I use it, it ends up costing me way more money, either by I need people to come over and redo everything I did with the drill. But I own it.
Okay, all right. Hey, that's fine. You own the drill. You are, in fact, an adult, according to our chat, at least.
But I'm a subpar driller.
But you're a subpar driller. Okay. So if anybody here sells courses or master classes and you do one on drilling, send the link in the chat. We'll get that over to Tom.
Definitely. And I'll get you a drill for your birthday. How about that?
There we go. I would love that.
And if we can get it in maize and blue, it'll be perfect.
There we go. Shout out U of M. Tom and I both University of Michigan alums here hanging out. Go Blue. Let's get some Go Blues in the chat.
Let's get it.
But all right, Tom. Let's talk about stocks a little bit, or I'm going to start getting harassed.
Okay.
I guess give me a name you like right now.
Okay, I have a new insight for you.
All right, let's see it.
You know me, I don't do small caps or gambling or anything. I only focus on large cap stocks. And I have a theory, which I share today with my audience, and I'll share with you as well here. So you know that I'm kind of I'm in a macroeconomical kind of world. So I always look at trends. So obviously everybody's talking about recovery, rotation, and as always, everybody's overreacting, right? You see
Yep.
Wall Street and everybody completely go berserk, go into FOMO, feeding frenzy mode, and just buy up everything that has an airline in it, or a hotel, or a casino, or anything basically you can think of as a good industry before the pandemic, and now that's been shellacked by whatever happened last year. So that overreaction happened, and there's going to be a correction. However, here's what I think a lot of people are misunderstanding about recovery, reopening, and rotation. And I've spoke about this before. I'll try to be brief. I have a theory that unless we have a time machine, so for that we'll need Doc Brown, Martin McFly, and 1.21 gigawatts plus a DeLorean. We're not going to go back to 2019. The reality as we know it has completely changed. So the reopening doesn't mean we're going back to whatever it was normal before this. We're going to go through this metamorphosis of a new society where we have different working patterns, different recreational patterns, different consumption patterns. Things have changed. Not to mention the fact that the disease or the pandemic, whatever you want to define it as, I don't think it's going to go away that fast. And even when it goes away, I think it's kind of a chronic disease we'll have to live with, such as the seasonal flu. So it's never going to go away completely to the point where we say, hey, you remember we used to have this? No, it's going to be around. We'll have to manage it, deal with it. Vaccines is going to roll out much slower than people think. So this whole process, A, is going to be slower. B, is going to lead to this new hybrid society where people are still more prone to working from home because it's more efficient, and doing stuff from home because it's cheaper and better and faster. And when you talk about recovery stock and rotation stock, especially given how expensive now the airlines, the hotels, and everything are because of the parabolic rise they had on February 22nd, you have to look for something more reasonable as far as pricing, but also something more reasonable as far as the adaptability of that company to this new post-pandemic world, not this classical old world that we knew before. And so there's a few companies that come in mind when we talk about it. The idea here is that we're looking for a company that's going to be a cash flow positive, established, with a lot of growth, but also a post-pandemic positive as far as its operation. And a lot of people spoke about Disney as being such a company, and I completely agree. However, that company got priced into the recovery as well. If you take a look at their charts, on February 22nd, they get priced into the whole rotation, and the price went up quite significantly. However, what happened during this whole technological sell-off of February 22nd and the whole week that followed is that a lot of people accidentally sold off Apple. And that I thought was amusing because people were selling off technological companies for one reason, because everybody anticipated interest rates going up. Interest rates going up, DCF valuations go down, especially if you have potential future profits, much like you have in pretty much every technological company that's early stage, right? So when the upside is later down the line, of course, higher interest rates means lower DCF valuations, stock plummet, everybody sells off. But what ended up happening, a lot of people misunderstood how this thing works and started basically selling off every single tech company they can think of, including Apple, which has current massive profits. It has a completely generic structure as far as, they're generating a lot of profit today, yesterday, and tomorrow. They literally have 0.5% of short interest, so nobody's shorting them. They have a 10% annual growth like clockwork. They're generating 30% EBITDA, which is insane given the fact that they're generating physical devices. And we haven't even factored in the fact that they're phasing into services more into the selling ink rather than the printer model. Basically, streaming service is still embryonic. 5G hasn't still launched. And we basically, if you take a look at the last 3 months, you'll notice, that we lost 5% of Apple compared to 3 months ago. So this stock.
And here's the 3-month chart up, guys. But keep going, Tom.
Yeah. So you lost 5% over this whole bull run because of the last couple of weeks. And this was completely unwarranted because although this is a technological company, this is not a technological company with future upside that any interest rates actually have any effect on the evaluation of the company. So a lot of people sold it because of misunderstanding that not every technological company needs to be sold off. But what's going on right now is that the smart money will start moving into Apple. But of course, as you know, look, they're going to do it slowly. They don't want to hike up the price immediately. So you'll see a slow creep of Apple upwards, I believe, in my opinion. Hey, this is not financial advice, just my opinion. And everybody's going to be riding the slow wave upwards, all the smart money. Here's the thing that you need to understand about Apple. A lot of people see it as a dinosaur. And with those people, I'm not going to argue. I mean, a lot of people are saying, well, this is kind of the new reincarnation of IBM. They're done. I don't think so. A lot of smart people don't agree with me. I think they have a lot left in the tank as far as innovation, especially in this services department. So I see in 5 years, Apple pretty much giving away phones just for people to get subscriptions to their services. I think they have a next wave of innovation. But hey, just my opinion. In any case, if you're looking for a good recovery stock, which I was looking for the past 2 weeks, which is modestly priced and has a lot of upside, I think Apple is worth looking into. But hey, don't just buy a stock because some guy on the internet says it. Do your due diligence and just look into Apple. That's my advice.
All right, and for people who are just joining us, I see some questions in the chat. Kathy Wood coming on 2 p.m. Eastern. What is that? We're at the, let's see, 9-minute countdown now till Kathy's joining us.
I tried texting Jason. You know what I told him? I'll give you a kidney if you let me stay on.
Okay, all right. Look at this. Jason, I don't know if he's watching the stream or not. He's not gonna like.
No, he didn't reply.
Look at him standing there. He's getting ready.
He's getting ready.
So Kathy's coming in just a second here. And Tom, I have a lot of respect for you for pitching Apple. In that, you know, again, this show is the Power Hour. If you guys like stock ideas, hit subscribe. We do this every single day, 2 hours a day.
Look how undervalued it is. It's 123. My target price for this stock is $160, but it's just my specific one. Look at how undervalued it versus. Look at the financials. I mean, they're generating a lot of revenue today. They're growing 10% a year. Do you know any company that makes physical products that have 30% EBITDA? That's really good numbers.
Yeah. And what I love about this, right, is when people come on, and a lot of times when they're talking about stock ideas, right, it's stocks that are pre-revenue, or they maybe even have a little bit of revenue, but it's all about the future. I love, and I previewed you throughout the entire show, Tom. I said he is the deep value guy. I love that you came on and pitched a stock like Apple. Again, check this out, guys.
Hey, listen, it's okay. Look, it's okay to buy lottery tickets. But I think that if you're trying to build generational wealth over a course of the next 15 years, I think the right approach is not to buy too many lottery tickets and just to make sure that the bulk of your investment goes on the companies that you'll know will. Okay, would you short Apple if I'll tell you, okay, for the next 10 years, would you bet that Apple will go down? Never. I mean, but again, it's just my opinion. I'm going to get off.
Are you still long BNGO?
Of course. I haven't sold a single share.
Should I ask Kathy about it?
I bought some today.
Should I ask Kathy about it? Hey, guys, Christian Gallagher, Apple symbols AAPL, not APPL. Maybe they should change it because everyone does that.
Yeah.
Do you want me to ask Kathy about it or no?
Sure. Can you drop my name?
Name, phone number. Yeah, exactly. YouTube channel. You get Kathy as a subscriber. Yeah, there you go.
I'm kidding. Yeah, definitely. I think it's a good question.
Is this view weird, guys?
Yes.
No.
We're looking at the back of his head. No,
but if
it's a little weird.
No, notice a constant.
I feel like you need an angle like this almost. You know what I mean? If you're gonna do the side.
Yeah. So, hey, Spencer, Aaron, they don't like the angle. They needed the camera more this way. They think. I don't know.
But this was supposed to be the second camera, was it not? Yeah, that's the change up.
Yeah. It's just supposed to be the second. So you think it's fine?
Yeah.
They think it's fine. Tom Nash thinks it's fine.
Hey, as a second camera, that's fine.
There's 3, Tom.
There's not 3.
What?
Oh yeah, he's right. There's 3.
Look at this. There's 3.
Luke is right. Yeah.
No, there's 3.
Luke's always right. Come on now.
It's kidding. Dungeon Luke.
But there's only 2 that I control.
We need to get you the dungeon theme behind you.
Yes.
So you don't care if I ask her about BNGO then, I guess.
No, I know that ARK is really heavy on PAC-B. I don't think they have any BNGO in their portfolio.
Wait, hold on. Someone's talking to me. Okay. All right. Well, okay. I think you have to get off, Tom, and then I'm going to get off, and Luke, you're going to transition.
Can you make a little cool sound effect as I'm getting kicked out?
Yep, kick sound effect.
All right. Let's see.
Something with the scream.
All right, wait, you're gonna get a double sound effect. Ready? Boom! He's got the scream and
Hey,
he's
Luke,
got the buzzer.
Luke,
Can I get
Luke,
producer
Luke.
Aaron in here, please?
Luke, let's go, because if she's here a little early, let's go. I mean, I have never seen anything like it. The demand. Wait till I tell my story, and so I am going to tell it quick. But there's so many questions people want to ask.
I know.
She's
this is the most impactful person on the market's joining us live in just a couple minutes here, guys.
And she's for the people, by the people. That's what I like. The transparency. I don't think I've ever seen it like this, and I think it's going to be a good story to talk about why she is so transparent with everything, and that's what I'm really excited about. So can we get it going? Get it going, Spencer. Take over. Let's go.
All right. I'm gonna roll it. Let's roll this video.
I think Spencer is
All right, Spencer Israel. While he's pulling that up, guys. I'm just going to give you a rundown of some of the stocks that we already talked about today on this show. We did Fubo. I took a new position in that one via selling puts. We talked about Peloton. We talked about ChemFarm. We talked about SOS. We talked about ticker SE. Of course, we did Rocket.